Welcome back everyone. In today's video I'm going to be explaining the Wyckoff method. It's going to be a follow-up video from yesterday's on liquidity, so if you haven't seen that already I recommend go and watch that first and then come back to this, because this will all make a lot more sense if you understand liquidity. That'll just kind of set the groundwork and explain the basics of how the market uses liquidity to make its strong impulsive moves. If you have seen that, then you should have a decent understanding and this should make sense. If you do have any questions after the video, then just leave a comment or send me an Instagram DM or join the Discord group and ask me there. So I'll start with talking about the concept behind it, and then I'll get into chart examples like this setup here, where you could have got buy entry here to take the market upwards. Okay, so the logic behind the Wyckoff method is that the market moves in phases like this, and it's not governed by trend lines and other stuff like that, but it's all moved by supply and demand, which makes sense if you think about it, because that's how all markets move. If there's lots of demand for something and not enough supply, price will go up. And if there's lots of supply but not much demand, price will go down. So there's four types of ranges in the market: accumulation, distribution, reaccumulation, which is when the price has been coming up and then makes another accumulation phase, and redistribution, which is when price has been coming down and then makes another distribution phase. But accumulation pushes market up and distribution pushes market down. If you're able to identify these phases, it can help you establish bias in trading, and can help you trade in line with the bigger players who are actually the ones moving the market. The kind of logic behind why the market moves like this and creates setups like this is that us retail traders, we can place any amount of lot size we want because we're trading quite small amounts. These big institutions are buying and selling lot sizes a lot bigger than us, and say they wanted to open 1 million lot size of long positions, but there's only 500,000 sell positions, then there's not enough for them to buy, and so half of their position will get filled at one price and then the other half will get filled higher, and they don't want that. They want to get the best available price for all of their positions. They want to be buying at the lowest point and selling at the highest point. To prevent this happening, what they do is they manipulate the market during these phases to kind of induce retail traders and other institutions to take positions which create liquidity, and then they're able to scale in their position. They buy some here, buy some here, buy some here, and then take the market in the direction they wanted to. Split it up into smaller pieces. Okay, I'm sorry about the somewhat low quality photo here, but hopefully it's good enough to get the concept across. You see, this is the accumulation phase, and it can be split up into 5 smaller sub-phases. In phase A, you've got selling power decreasing. PS stands for preliminary support. SC stands for seller's climax. AR stands for automatic rally. And then ST stands for secondary test. But I'll get into that. So the selling force is kind of decreasing and the downtrend is starting to slow down. One thing to note that you could see in this phase is an increase in volume. So if you add that indicator to your chart, that can always be a good confluence or good sign. The preliminary support is there to show you that buyers are starting to want to get in. They're seeing that price is at a level that they want to buy at. And so that's the first sign that we could be going into an accumulation phase. This then gets taken out. There's going to be liquidity resting below the preliminary support, which gets taken out by a strong move to the downside and creates the seller's climax. Because there's a big strong push down, a lot of people are going to get scared, let their emotions take control, and there's going to be a lot of volatility and maybe some wick rejections to both sides or to the downside. So that's something to look out for as well. Because of this extremely discounted price, a lot of buyers step in here, which causes the automatic rally to push up, and this normally coincides with a change of character. So on a lower time frame, you might see a change of structure suggesting we're going bullish. The secondary test, there's a few of them, but this one is price coming back down to test near the seller's climax, see if buyers still want to get in, and it should push up, and that would confirm that we could be turning bullish. Phase B is based on Wyckoff's law of cause and effect. It could be argued that phase B is seen as the cause that leads to the effect, with the effect being strong push up. But basically, phase B is the consolidation phase where the big institutions are scaling in to their order so that they can get, as I said earlier, the huge position size split up over buy here, buy here, buy here. During this phase, then the price normally creates a range, creates some resistance and some support. You've got two support levels created by the rally and the secondary test, as well as anything else that happens in this range. You don't have to be strict with it being the automatic rally and the secondary test. It can be just the highs and lows that are formed in this range. To be honest, most of this stuff that we've covered so far is more concept, and it's not what I look for when I trade the Wyckoff method, but it is always good to just know why you're trading it. Phase C is the main thing that I look out for, and this is where the idea of liquidity comes in. So you can see all these levels are somewhat equal lows, especially these two here. And so there's going to be a lot of liquidity resting below them. If you've watched my previous video, you'll understand why. But this gets taken out in phase C, and this is what we call a spring, where liquidity is absorbed by the institutions, and now it's confirmed. Not confirmed yet, but it's confirmed once you get a break of structure up here that we're turning bullish. While this is the ideal situation, you won't always get a spring in phase C. Sometimes it could just test this support level. If the support level is strong enough and the institutions just want to buy at this level, then it could just be, a triple bottom, which is why retail methods do work sometimes. Sometimes a triple bottom will cause an up move. But that's phase C, and then on to phase D. So phase D is kind of the transition phase. You're changing from the cause, which is the accumulation, the consolidation, into the effect, which is a strong push upwards. What you will see in this phase as well is a lot of trading volume and possibly quite a bit of volatility. One method to get in here is to wait for a change of character here. As you can see, you get a break of structure to the upside, and then buy at one of the support levels, stop loss below the spring, as that should be safe, then target. If you just want to target short term, you can target the resistance level, or you can target somewhere up here and hold for longer for a higher risk reward. I don't use this LPS and SOS stuff, but LPS stands for last point support, and SOS stands for signs of strength. So that could be a break of structure, and it's breaking this resistance level, showing that we could turn bullish. And then phase E is kind of the effect. It just confirms everything that we've seen here through the break of this trading range, and now we know we're going bullish. So you can look for signs, maybe a retest of the resistance level and then continue long. There's many different ways to trade this method, but that's the accumulation phase, or the accumulation schematic. The distribution schematic is kind of similar, just upside down, but there's a bit of different terminology, so I'll explain that one as well a bit. Okay, so as you can see, it's kind of the same, just upside down. But here you've got PSY, which stands for preliminary supply. Then you've got buyer's climax, the automatic rally reaction, not rally. And then you've got secondary test again. So phase A is the same, just upside down. Then phase B, a secondary test. You could call this an up thrust, which is kind of like a spring, but in phase B. But yeah, phase B is the consolidation phase, as it was with the accumulation, where the institutions are scaling in their short positions, creating liquidity so that they can place their larger orders. What you'll be looking in here for is different types of liquidity, trendline liquidity, equal highs at some point. And if you want to look at more types of liquidity, then watch my previous video. But if you already know, then you should be able to spot them. UTAD stands for up thrust after distribution. So you get up thrust and an up thrust after distribution, which should take out liquidity of the initial up thrust before price comes down. What it will basically do as well is breakout traders, when they see a break above this resistance level, they'll buy, which will offer more liquidity for the institutions to go short. So there's two sides, people shorting with their stops above and people buying the breakout. So there's double the amount of liquidity. So this is where they're going to get most of their orders in. Obviously they'll get some there, and then most here. And then phase D, again, same as the accumulation, just the other way. Not too important, but you've got the last point of supply and any signs of weakness, so break of structure to the downside. One way you can use this actually is to look at supply and demand caused by the UTAD, which is what I do. Look for the supply zone here, and then hopefully price will come back up before going back down. This is the distribution. schematic. So just kind of learn it and backtest the charts, you know, see if you can see it, because if you can't spot it in the past, then you won't be able to spot it while it's happening live. So the more time you spend backtesting it, the clearer it will become. So obviously not every setup's going to be perfect, but this to me is a Wyckoff schematic that you could trade. You see you've got the strong selling before an automatic rally, then you get a secondary test showing signs that it could go bullish through a change of character. And then you've got the liquidity created in the phase C, or just like the main phase. You've got some lows here, and you've got some equal lows here. You know, the liquidity resting below both of them. You get the spring here. This is the main part I was talking about. You want to break the liquidity and then a strong push up. Okay, so now you've got your bias. Liquidity's been taken out and pushed to the upside. Your bias should now be bullish. So what you can do is go to the lower time frames and look for entries. So it's probably confirmed bullish around at the close of this candle, the close of the last bullish candle. So if I just replay the markets there, what you can do now is go to, say, a lower time frame, maybe the 5 minute, and look for any supply zones that were left behind. So stuff that I'd be looking for, maybe this whole bit of structure here, but also this supply zone there and this supply zone. Something that I will teach you in another video is using fib to kind of see which supply demand zones you want to get into. You don't really want to get in anything above the 0.618 level, so this one I probably wouldn't get into, just because you're not going to get, as there's probability of the market tapping into that one and going up, it's more likely to come down lower. So I'll go to that one, and we'll see what happens. I'd probably place a buy order here, stop loss below. You can do a stop loss below there, you can do a stop loss below there. Depends how you want to trade it. Even something like this. No, and then you could target. If you want to target that high, that's a 1 to 3.5%. That's a nice trade for the week. Or you can, what I prefer to do, be a bit more risky and then place a couple of trades. There's a bit of overlap. And this one's got quite a large stop loss, so I'd probably place that there anyway. Oops. Something like that. No target wherever. And we'll see what the market does. Okay, so it's tapped into our first zone. Looks like it could push up. Okay, so it's going up. Okay, so it did miss our second zone, but that's alright. We've got a nice entry on the first one. You can always look for re-entries as well. You don't always have to get that first one. Just watch out for liquidity. If there's liquidity formed, then you can be quite confident the price will come back into a zone. Okay, something interesting here. You get some liquidity formed here. So you can look for some, no, put your fib on if you want. You can look for liquidity, look for order blocks below this liquidity. Possibly here. There's nothing that really speaks out to me. This should be a demand. This. Yeah. I think this one actually might have already been tapped into. Yes, it has. So, there's a possible demand zone here. Below the liquidity. That could be quite nice. I don't think I'd enter that, but you could tap into it and go up. Or it could just take off. We'll go to a higher time frame just to speed up a bit. actually tapped in. So yeah, you could have got an entry there as well. But I don't think that's something I would have entered, but everyone's got their own view on the market. And so this would have been a nice trade using Wyckoff. You know, if you'd held to the top, obviously you wouldn't. But if you had, that'd be 36%. I mean, it's not too bad of a hold either. You could keep moving your stop loss up below these lows, then below here, below there, below there, below there, below there, and then either get taken out for about 30% gain. That's not too bad. So that's basically the theory behind it, and then the live example of how you could use it. So I hope that's given you an insight into the Wyckoff method, and hopefully you can go away and make some money with it. But just be sure to backtest it before you start trading live. And if you do have any questions, then leave them in the comments or DM on Instagram, or join the Discord group where I also post my setups that I take. But thanks for watching, and remember to like and subscribe. Thanks.